Good morning, welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is September 12th, the WASDE report day, something we've all been waiting for. Let's get right into the price action and see how this market was affected. Corn for December trading down 11. Really hasn't had a lot of price action here. Beans is where the action is, up 42, trading up around 17.43 on that Nove contract, and wheat has been bouncing between lower and slightly unchanged. Logan, since beans is where the action is, what's driving the market?
Absolutely, Cody. Well, let's jump into these numbers that we saw come out this morning here. As you can see here, the number that everybody was looking for right off the bat was this yield number. As you can see, the USDA is projecting 35.3 bushels per acre on average out of this 12-13 crop. That was actually below expectations of 35.5 million bushels here. Moving on to production, the USDA actually didn't change harvested acreage at all in this report. Accordingly, with a lower yield, we're now looking at a lower production. 2.63 billion bushels expected out of this crop. Again, lower than trade expectations. Ending stocks, one thing that did come out higher than trade expectations, 115 million bushels they're expected by the USDA, unchanged from their August report. The one thing, though, that everyone's watching right now, or that's catching a lot of attention here, is the 11-12 carryover number here. Actually revised lower, 15 million bushels. What does that say here for the soybean market? It means that demand is not being destroyed in the soybean market like we're seeing in corn. Prices are going to have to go higher here to ration demand.
Yeah, I would agree. When we're looking at corn, let's get right over there. What surprised the market really was the yield number. We had expectations around 120.6 bushels per acre. We came in around 122.8. That was a surprise. Notice also harvested acres wasn't revised. I think the market was kind of scratching their head there, and I kind of think they're writing off that ending stocks a little bit this morning. Because of that, they would expect to see some abandonment, but we didn't see that reported this morning. Also, production was revised actually higher here. That missed analyst expectations. I mean, and really the big thing is carryover. If you look at the carryover number, we actually saw carryover increase from the 2011-2012 crop,
right.
And I think that's really going to affect the market. I think it shows that there was demand rationing at the $8 price level, and I think right now there's not a really bullish story for corn, and that's why we're seeing it for the most part unchanged and slightly lower.
Right, certainly. You know, I don't think this report gave the corn bulls out there really the fuel they need to push this thing higher here in the near term. Very different report this morning out for soybeans than it was for corn. What were we looking at for wheat?
Yeah, wheat was kind of interesting. We came in right about on par with analyst expectations. We saw Russia downgraded to 39 million metric tons from 43.
Right.
So that was expected. We knew that the crop was worse than what we saw in August, and so that was expected. We saw Ukraine, we saw Kazakhstan both kind of revise higher and lower, but they washed each other out. I think the big wild card here is Australia, and the big surprise in this report for me was Australia not being revised. The USDA right now is sitting at around 26 million metric tons produced for wheat out of Australia. We saw a report out of Sydney yesterday, actually, and they were expecting, their estimates are around 22.5 million metric tons, and they had a previous estimate, so that was revised lower from a previous estimate of 24.1. So the bottom line here is that I think the USDA is playing it very conservative. We know that Australia is right now during the vegetative to heading stage. We know that they're very sensitive to heat. We know that they're very sensitive to dryness, and I think that's what they're getting. There is still a lot of growing season left, but I think one of the themes in the wheat market in the months to come will be Australia and whether or not they get rain. So pay close attention to the weather down there. That will definitely be affecting wheat prices.
Right, well, we'll keep you posted on that on GrainTV. Kind of staying on the world production front here, one more interesting thing that we did come out here as it relates to soybeans was expected production out of Brazil. The USDA actually left that figure unchanged from what they said out of their August report. They're looking for around 81 million metric tons there in Brazilian production for the 12-13 crop. This is lower than what we've seen come out from, we've seen Ag Rural, Informa just this morning, FC Stone come out with a figure around 82 million metric tons. So I'm expecting the USDA in the coming months to have to revise that figure higher. Obviously, Brazil is going to be feverishly planting soybeans, trying to make up a production gap left by the U.S. here this summer and capture these exceptionally high prices.
And perhaps that's also why we're seeing the spreads go crazy right now. We're seeing November beans starting to move a lot higher, but the deferred contracts aren't moving in tandem.
Right.
And so, I mean, what is the effects of that spread on the U.S. producer? What are the implications?
Right. Well, if you look at this carry in the market right now, there absolutely is no carry. There's a huge inverted market in beans right now. Right now, if we look at the new crop November contract, it's trading at about $1.80 premium over the July 13 contract. Producers right now have absolutely no incentive to store this crop. Right now, the market's screaming for producers to sell this crop right off the combine.
Yeah, there just doesn't seem to be very many opportunities in the forward months for those producers. I think it's going to lead to probably extended periods of depressed basis right off of harvest, but it also means that I think there's an opportunity for basis to improve for those March and July delivery periods if you end up holding on to basis. I think the play there would most likely be doing perhaps a forward contract. If you wanted to do a forward contract, you'd do a hedge to arrive, leaving basis the opportunity to improve. I think that, like you were mentioning, really we're going to be short on beans here in the later part of the marketing year just because the spread has no incentive for producers. You know, also with beans, I think let's just switch over to fire tip here for producers. Beans is the big story. Beans is where we're seeing the gains. Does beans have the gumption? Does it have the story technically and fundamentally to take out the highs that we saw printed here about last week?
Yeah, I'd say absolutely yes to that question here, Cody. If we take a look right now at the November soybean chart, this is a daily candlestick chart here, and as you can see here, in yesterday's action, the trade traded down here, and we found a lot of support there around 17. That was a high that we printed back previously in July. This should act as support here moving forward. So technically, this contract is still fully in a bull move here, and the fundamentals right now are backing this up after this report that we saw come out, Cody. Lower than expected yield, and like you said, that harvested acreage number, a lot of people are looking for that figure to come down as well. There's just not going to be that many soybeans available for consumption here come harvest in the U.S. And the bottom line, from what we saw from the 11-12 carryout number, demand is not being destroyed. This thing's going to need to go higher here, maybe test, certainly push through the highs. A lot of people right now are talking between $18 and $20 a bushel is what's going to be required to really knock demand out of this market like we've seen happen to corn.
That sounds fair enough. I'd second that motion. Also, tune in for tomorrow. We'll be tweeting on Twitter all day long on the price action, any key support levels or resistance levels that we're approaching. Thanks a lot for tuning in. We'll see you on Thursday.
Have a good one.